Today, we're about to unlock the secrets of investing. I'm talking about turning your hard-earned cash into a financial powerhouse. So first things first, what is a stock? Buying a stock is like owning a slice of your favorite pizza place. It means you're a part owner of a company. When you buy a stock, you're basically saying, I believe in this company's success. You get shares, which are like your ownership tokens. More shares mean a bigger say in company decisions. Plus, if the company does well, so do you. The value of your shares goes up. Some companies even share their profits with you through dividends. It's a little extra perk for being a part owner. So, in a nutshell, a stock is your ticket to a company's success story. It's your way of saying, I'm in, and I believe in this company's future. All right, now that we've got the basics of stocks down, let's talk about why you should dive into them. First off, stocks have a proven track record of impressive returns. For instance, since 1978, the global stock market index has delivered an impressive average annual return of 9% to July 2023. Albert Einstein once called it the eighth wonder of the world, compound interest, which is like a magical bonus round for your money. You see, not only does it earn returns on your initial investment, but also on the profits it makes. And guess what? That leads to some serious exponential growth over time. It's like giving your money superpowers. Speaking of superpowers, there's also diversification, which is like having a balanced breakfast for your investments. By spreading your money across different companies and industries, you're not putting all your eggs in one basket. So even if one company hits a bump in the road, it won't send your entire financial plan into a tailspin. Another thing to consider is inflation. Over time, the value of money tends to decrease due to inflation, which is the gradual increase in prices of goods. But don't worry, investing in stocks is like your trusty shield, because as we saw earlier, stocks have provided returns that tend to outpace inflation, helping you stay ahead of the game. All right, now that we're all pumped up about investing, let's take a step back and talk about some important things to consider before jumping in. First things first, let's talk about risk. You see, investing isn't a one-size-fits-all deal. It's got its ups and downs, just like life. Before diving in, think about how comfortable you are with those ups and downs. Your risk tolerance is important to keep in mind when investing, as it determines how much risk you can handle without losing sleep at night. Next up, your time horizon. Are you in it for the short haul or the long run? Knowing your time horizon is like plotting your financial journey on a map. Short-term goals like buying a car or going on a vacation might need a different strategy than long-term goals like retirement. When dealing with short-term goals, you might want to focus on safer, more stable investments, as you don't have a lot of time to ride out market fluctuations. Long-term goals, on the other hand, can handle a bit more risk. You've got time on your side, so you can potentially ride out the ups and downs of the market. Another crucial thing to consider before investing is your emergency funds, which is your financial safety net. Think of it as your trusty sidekick. Before investing, make sure you've got some cash set aside for those unexpected expenses. You don't want to sell your investments prematurely because the car decided to throw a tantrum, right? And speaking of sidekicks, let's talk about debts. High-interest debts can be like the supervillains of your financial world. Before you start investing, consider paying down those high-interest debts. It's like clearing out the baddies before embarking on your financial adventure. Last but not least, your financial goals. Setting clear goals is like having a treasure map. It helps you stay on course. Are you investing for retirement, a down payment on a house, or maybe just building wealth over time? Knowing your goals will shape your investment strategy. Folks, we're getting to the nitty-gritty. How much green do you need to start this investing adventure? Well, here's the fantastic news. You don't need a suitcase full of cash. You see, investing isn't just for the big shots on Wall Street. Even a small amount can kickstart your journey. In fact, many digital platforms nowadays offer something cool called fractional shares. It's like buying a slice of your favorite pizza without having to get the whole pie. So no matter how much you have, there's a way to get started. Now here's the real talk. While you don't need a fortune, you also can't expect overnight riches. Investing is more like a marathon than a sprint. It's about consistent, smart decisions over time that lead to growth. Okay, let's put some numbers on the table. Whether it's $50, $100, or even $500, every bit counts. It's about finding an amount that fits comfortably into your budget. Remember, it's not about how much you start with, but the habit of consistently adding to your investments over time. Think of it like a piggy bank. You drop in a few coins here and there, and over time it grows. That's the magic of compound interest we talked about earlier. So now that we've covered the basics of investing, it's time for a showdown about what to invest in. We're going head-to-head with individual stocks and index funds. Individual stocks are like hand-picking players for your dream team. You get to choose the companies you believe are going to hit it out of the park. This approach can be potentially very rewarding. But here's the kicker. It also comes with more risk. If one of your chosen companies takes a tumble, it can have a bigger impact on your overall investment. Now let's talk about index funds. These are like the Avengers of the investing world. They're a team of different stocks that track a particular market index, like the S&P 500. This means you're investing in a bunch of companies all at once. The cool thing about index funds? They offer diversification, which means that if one company in the index isn't doing so hot, it's balanced out by the others that are doing well. So, which one is right for you? Well, it depends on your investing goals and style. Many investors use a combination of both. They pick some individual stocks for that personal touch and sprinkle in some index funds for that diversification magic. All right, champions, we've covered a lot in this video, and I hope you're feeling pumped up about diving into the world of investing. If you found this video helpful, then hit that subscribe button for more financial wisdom from Investor Express. Thanks for watching.